This is Matthew Cratter from Trader University, and today I want to talk about a particular type of candlestick chart pattern, which is the shooting star, and how you can use it to profit in the stock market. If you're interested in learning trading strategies that make money in both bull and bear markets, or you just want to see what I'm trading or investing in, be sure to hit that subscribe button. So we'll do a quick review of candlesticks here for those who are not familiar with them. If you're in TradingView, you can toggle between regular bar chart, which looks like this, and candlesticks. Just up here you select candles. Now the way candlesticks work is that you have something called the body, which is the colored part, and then you have the wicks, which are the pointy parts on each end. Now the top of the wick is the high of the day, so we're looking at daily bars or daily candlesticks here for Amazon. The bottom wick, I don't know if you can see it on this little candlestick, you can see it very well right here. The bottom wick is the low of the day. Now let's talk about the body. So we have the wicks, the high of the day, the low of the day. The body is green if the close is above where you opened on the day. So the open would be down here and the close would be up here. If the candlestick is red, that means that you opened up here and you closed lower than you opened on the day. So I find it to be a very useful visual representation of price action. A lot of people say that technical analysis or chart reading is equivalent to astrology, and I don't think it is, because as you're going to see, what price action tells us is it shows us the balance between bulls and bears and the sort of price war that's taking place. And it's just there's nothing magical about candlesticks, but they're a very nice way of organizing information and making it easy to visualize. So that's basically how candlesticks work. You have the red body if the close is lower than the open, green body if the open is if it closes up on the day from where it opened. So let's talk in particular about what's called a shooting star candlestick. And the example I'm going to use here is Toll Brothers, this candlestick right here in the middle. We can see that it's got the very long wick right here. It also has a very small body on the end. So a candlestick's always going to look kind of like this. And the body down here can be either red or green. It doesn't really matter. But what does matter is that you have this very long wick on top. And let's think about what this means. Let me scroll in a little bit to make this a little easier to see. So on this day, we opened right here at the lows, the bottom of this candlestick here. During the day, we didn't trade below that open, but we rallied all the way up here. And then what happened? This rally was met by a lot of sellers who drove the price back down such that it closed a little bit up from where it opened. It looks like it closed roughly where it had closed the day before. But what we did experience was a price rejection of these higher levels. So maybe there's some big executive at Toll Brothers who really is happy to sell any of his stock, or to liquidate what he can liquidate for that quarter or that month above 22. And when this happens, the price is rejected and the stock's unable to close above 22. And so you get this very long wick. And this is what makes shooting star candlesticks so useful. They show you areas where the sellers, the bears, took control and drove the stock back. So a very useful way of using this to trade is if you're interested in shorting stocks, when you see a candlestick form, especially when it's at the end of an uptrend, so the stock's been moving up, you get a shooting star candlestick. That can be a reversal sign. And so what you can do is you can just go short at the end of the day, and then you set your stop at the top of this shooting star candlestick. And so if the stock rallies back above in that area and is able to close up there, that tells you that that this is no longer an area of price rejection. So what one can often do, and I've done this many, many times, is you short a stock on a bearish candlestick signal like this. Quite often it'll go your way and you'll begin to make money. But if it doesn't, if you begin to trade above this high, you first of all exit your short. If you close up here, then that can be a very good signal that this is no longer an area of resistance, and you can go long, and you can basically flip your trade, and rather than fighting the market, you can profit from the market. So this is an example of the shooting star candlestick. This comes from Japanese candlesticks, and they have very sort of picturesque names. This looks a little bit like a shooting star or a comet with the very long tail. So let's look at variations on this. As I said, it doesn't really matter whether the body is red or green, as long as the body is relatively small relative to the wick. You want to see a long wick, and you want to see this sort of price rejection. So now, having understood that, we can look at some variations. When we were talking about Pinterest the other day, this is one we've been talking about for a while, and my subscribers have known about for a while. And I pointed out that we were having it was probably a reversal day given the price action right after earnings. So we did get this amazing gap up where the stock gapped up 30 or 40%. And then it traded much higher after opening. We got this long wick, and then it closed near the bottom of the wick. Now, this is not a true shooting star, but the important point is that we have this very large price rejection up here. And as you can see, and as I suggested was going to happen, we have a retracement beginning. It's impossible to know how deep this will be, but if you are long a stock and you've had a pretty good run, maybe you entered right here when the blue line crossed above the red line, the 50-day moving average crossed above the 200-day moving average, which is the red line. You get some nice price action. You get a very big earnings gap right here in August, and then you get another gap here in October, and then you get another gap after earnings. Often when you have three gaps, the third gap can be what's called a price exhaustion gap or an exhaustion gap. And when combined with a shooting star, this can be a sign to take profits, possibly even go short. When you have a stock in an uptrend like this, especially a growing stock where the underlying company is doing well, and the stock's trading above the blue line's above the red line, we still have an uptrend here, but we can use shooting star-like formations as places to take some profits and to lighten up, especially if we've had three gaps in a row. That can be a sign that the market's just really getting ahead of itself. It obviously was pricing in very good earnings, but then the reaction to those earnings has not been as strong as we would hope. We haven't really seen follow through, so this might be a sign that it's time to move our capital to another stock that is behaving in a better manner. So this is one way to use a shooting star-like formation to take profits in a trade. Here's an example of a fairly interesting entry. This is in Gap, GPS, and this trade took place on March 1st, 2019. What we have here is sort of the inverse of what we were seeing with Pinterest. We have a stock that's been very bearish. The price has been trading below the 50-day moving average, which is the blue line below the red line, which is the 200-day moving average. Then we have a fairly bullish, what looks like a very bullish earnings report here. You get a big spike up in volume, and the stock gaps not just above the 50-day moving average, but above the 200-day moving average. But then the price action becomes very, very bearish. So we get that very long wick that's characteristic of a shooting star. This looks basically like a shooting star. The body's a little bit big, but again, we don't have to be real sticklers for this. What we want to do is take away the general idea that a price rally up to these levels was met by sellers. Maybe after earnings, then the executives can come in and sell into this, or large investors can come in and sell. And so what you get is, even though you had this fairly bullish price action for a day, you get a very long candlestick wick here. You get a shooting star, and then you get a very big red bar the next day. And as you can see, this led to just a continuation of the downtrend. And we can see that the whole time the blue line stayed below the red line, which is a sign that we were in a downtrend. So this is another way to use these long upper wick formations as an opportunity to get short. And one could be fairly agnostic on this gap up, for example, but then once we got the long wick during the day, you know that this is no longer a really good long play, especially a stock that's been hitting new lows. You want to wait for a stronger reversal than this. So that'd be another example of a shooting star-like formation. We'll look at one more, which is not a very well-formed shooting star, but this is a good example of how you can trade IPO action. People often end up being the bag holders. They buy into a hot IPO, and then the price action goes against them, and they don't really understand the underlying company. And what they end up doing is basically getting dumped on by insiders, especially once the lockup of insider shares happens and they're able to sell. But one way to prevent this is to take a look at price action from when the stock starts trading. So we don't really care about where it was indicated or where it was originally priced. What will happen is they'll pretend that you could have bought this at $10 or wherever it was priced, and then CNBC will be very excited saying it opened up at $13. It opened up 30% higher than where it was priced. But what we do see here, and if I can scroll in a little bit, what we see is just the price action was very terrible, and this is a very good warning sign, especially to retail investors, that this is not an IPO that you want to buy into, at least at the beginning, until the insider selling has really been flushed out. In this case, we have that very long wick like we see in shooting stars. We don't have a small head at the bottom, but we do have a red head of the shooting star, and we can see that the stock it opened right here, and then it closed lower than it opened, combined with the price rejection at higher levels. And so this was a sign maybe to sit on the sidelines. You usually can't short a stock that is recently IPO'd. But then if we had any doubts about that bearish price action, it was really confirmed by this giant red bar the next day where we opened here and closed at the lows of the day. We closed right down here. And as we can see that the selling really just continued for another month or so after this. So this can be a helpful tool for retail traders. You can read the market sentiment just from these two opening bars and not end up getting trapped along with other naive retail investors in an IPO like this. If you enjoy this sort of price action trading, this way of thinking about the markets and analyzing charts, I'd encourage you to check out my price action trading course, which is a paid course available at Trader University. We go through candlestick charts in detail, and we talk about trend days, we talk about spinning tops, we talk about engulfing candlesticks, really everything you need to know in order to trade price action, both bull market setups and bear market trade setups. Now, the good news is if you join Trader University, you don't just get access to the price action trading course, you get access to all 15 courses that are on the website. This includes my momentum stocks secrets, which is more of an advanced course. If you're a complete beginner, I'd suggest you start with Learn to Trade Stocks Like a Pro, which is really meant for beginner traders and will take you from A to Z, really bring you up to speed so you can benefit from the other courses on my website. Learn to Day Trade is another good one for you day traders. If you want to dig more into IPOs, we talked a little bit about it in this video, but I go into depth in my Make Money with IPOs video. You also get a list of my favorite momentum stocks. This is the list that I have on my desk that I refer to whenever I want to trade. This is sort of the pool that I fish in. Also a course on trading futures, swing trading with options, really everything you could want to know. In addition to, I actually even have a bear market strategies course here and a real estate course. So again, you get access to all 15 courses. If this is something that interests you, you can click on the description notes below. It'll take you to this page, and then you can click on any of these boxes, and it'll take you inside and show you the list of lectures associated with each course. Then you can scroll down to the bottom here, click Get It Now, this button right here, and it'll take you to the checkout page. Now, normally access to all 15 courses is just $125 for 30 days access, but I want to give you a special coupon code because you've listened this far. If you click right here where it says have a coupon code and then type in capital YT as in YouTube 99, click update, and that'll take $26 off. So you'll get access to all 15 courses for just $99 for 30 days. Again, there are no long-term contracts or anything like that. And so you can watch all the courses before 30 days are up, cancel, and you won't be charged again. But if you do want to stick around, I'll be constantly updating my courses, adding new courses, adding to my list of momentum stocks. Thanks a lot for watching this video. If you found it helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I post my daily videos on YouTube. And let me know your questions and comments in the comment section below. Let me know if you find this kind of video about candlesticks, price action trading, if it's something you're interested in, or if you have another suggestion, what you'd like to see me make my next video about. Thanks a lot for watching, and I'll see you in the next video.